these data centers. Like I already started moving my money into ball bearings, and for robots. I think robots are going to be a bigger play than data centers. Got to be really careful here with this semi bubble bursting. It takes all the indexes down with it, okay? Because there's so many of these stocks embedded in so many ETFs that you can own something else that has nothing to do with the semi industry, and the price is going to go down because the ETF goes down and they have to shed assets in proportion to the way the shares are laid out. So you can lose even if you had nothing to do ever with semis because of the way the passive investing and the market cap weightings rules work for ETFs. So
good afternoon, everyone. Thanks for joining once again. We are going to look July through October. I'm here with Bob Kudla from Trade Genius. It's going to be an unusual time for all of us. And what we're seeing with the on again, off again war, we got the CPI, which is the consumer price index, which is really much lower than they expected. Something doesn't seem really all above, board with that when they subtract out energy and they subtract out food to get these calculations. There's, the summer seems to be one of those times anyway where a lot of things are, in motion to set up for the rest of the year. So as we move through these next couple of months here, Bob, I'm going to pick your brain. Thank you for joining me. The floor is yours.
Yeah, first of all, hey, thanks. And if you hear any background noise, that's my glorious air conditioner running. I'm doing it for the benefit of the Europeans who don't have air conditioning. So
I got mine set at 45. I need to put on a parka and a hat, Bob.
Yeah, if you see ice crystals forming, you should just run for a couple minutes. But hey, I wanted to, first of all, explain the CPI report, because what people may think is something nefarious, there's a lag in the CPI report because they blend it. So they blend months together, so you don't get these big wild movements. And so I learned this because there was a frustration about a year or two ago when they were knocking inflation out, but the inflation numbers kept coming in high. And then we went and looked at how they're calculating it. And the same thing here is that we've had now 3 months of oil prices going from 110 down to $67. Okay. And you have rent, you have rent that has been falling for months now, and food prices abating. So you're starting to see the good guy from that blended move down in energy. And I was joking with people and said, we may see negative prints here coming up, but now that the war started again, we may get next month, maybe another report that beats, and then we'll start drifting up higher again, even if oil doesn't continue to go higher. That's how it works. The good news is it took pressure off of Warsh to have to make a rate decision at the next meeting. He probably pushed it off for another 6 weeks beyond that to evaluate. And by then, oil production around the world outside of the Strait is continuing to increase. And so the Strait becomes less and less meaningful over time, except for the countries that are stuck in there. Now, having said that, the reason why we're talking July to October is there is a regime shift. From July 15th to October 15th, you have the volatility markets have seasonality where they rise. And when volatility indexes rise, that means the risk becomes risk off. And that's why you always see September, October, sometimes into August, you see the markets having difficulty or selling off. And then you get that Christmas boom because the volatility regime flips back, from October 15th then to January 15th. You have a period of time where volatility falls into the end of the year. And then it picks up again middle of January to the middle of April, and then down again from April back to July. That is a thing. It's long-term seasonality. and it affects the aggressiveness of buyers and sellers in the market. So we're going into a period of time where we have the stock market that's going to having headwinds. On top of that, we have the semis that are the bubble is bursting. If you noticed in the semis, because of the valuations do not match with reality, even though they're having tremendous gains in fundamentals. That pricing has to come down in those values before it catches back up again. And you're seeing that. And then you're having that activity move from the semis back into the software space. So you're getting a bit of that rotation. We also got rotation into healthcare. And so you have volatility up, you have a bubble bursting, you have energy rising. Okay, and energy typically doesn't rise this time of year. Usually peaks in June, falls into September, and then rises again for the heating periods. But everything's kind of out of whack because of the war. Now, having said all that, and then here's the other thing too, and then with oil going up, interest rates have been going up, and that's why Bitcoin, gold, and silver have been getting crushed. If you notice today, Bitcoin, gold, and silver are all getting a bid. Okay, is because they're totally dependent upon interest rates that are lower than they should be, and then when interest rates are rising, it brings the dollar up, which causes those assets to fall. So that's kind of where we are in a nutshell. And if you want me to, Dave, I can show you my chart because we manage all this through our indicators that, obviously with the rise of AI, we're able to just make these better and better. And I can show you what I use internally and how I generate watch lists and be able to provide trade signals for our subscribers, if you want me to do that.
Yeah, I'd like to, because August 11th, SpaceX unlocks 25% of the shares. So a lot of people are expecting to be mass selling during those days. So I'd love to see what you have because, the DTCC, the Depository Trust Clearing Corporation, is starting with their first tokenization for real on their platform live. So, Stellars might get a little hit off of that, but October of this year, full global one world currency is being rolled out with this tokenization. I subscribe to all the newsletters, so I watched the live videos on how they were transferring, have these buckets of capital. So there'll never be another market crash ever again, and companies will never be wiped out on margin calls ever again because they can pull liquidity from somewhere literally in minutes across the planet of quadrillions of dollars just sitting there. Most amazing thing, the one world currency actually begins as of we speak.
What you see here, first of all, on the left is the chart. On the right is my watch list. And on this bottom left are the alerts as they come up. And so one just showed up right before we started talking, ARM, which is a semi company. Okay, and what that's telling me right here is that you see these squiggly lines here? These
Yes.
are standard deviations of the average true range from the center line. So we work off a 20 period moving average. The back testing tells us when you penetrate these the 2.5 and the 3 and it comes back in, you got a trade that'll take you back to at least to the center line. And so that's the number one. And number two, this is more of a secondary signal for trades for long and short. But what I look at every day is that I'm looking at, and on these verticals are telling us how oversold or overbought the market is. So a lot of times what I'll do is when I'm looking at a trade idea is that it'll pop up for me. Like it's telling me with purple triangle that this move is overdone, but you don't necessarily trade it yet. You wait for a reaction from that trade. And so what I'm looking for now is I'm looking for this oversold blue area to go green, and then you can run a trade up to that level, okay? And so we've been having some really great opportunities with these trades, like if you looked at like USOY, or actually better to see a USO. If you notice here is that when it bottomed out here, changed color, you would have bought it at 103. Okay, now it did a 16% move, but you would have ran it up till you got sell signal here. Okay, you got a sell signal here, came back down, touched the center line, but didn't break it, and then we got another buy signal here, and it's running back up again. We took profit on USOY today, though. Okay, so we got in on this trade at USOY at 665, right here on the save, and then we closed it today at 7. People got it. I got out at 712. A lot of my customers got out between 710 and 715. So that's what we use to inform us. See, if you notice there, it got red, oil pumped. Okay, we got a sell signal on oil here. Everybody thinks oil's to the moon, right? We got a sell signal. RAI was telling us that this move was done. Pulled back to the center line, and whenever it pulled back to the center line and holds like that, and then you get what's called a recapture of the stochastics. Well, you don't see that, but I also have that signal too, and I'll show it to you here. So whenever you see a 555 here, this is a recapture of the Stokes. Another one of my algos that run is that it'll flash me a trade here, and then I know then to jump on a trade going up, especially if it holds the center line and you get a recapture of the fast stochastic. You take that trade, and it's high probability of profit for you. Okay, so that's all I do all day long. The news flows through me, Dave, and I don't care. Okay, all I care about is the market participants. How are they analyzing and synthesizing the data, and how are they trading it? But I am what's called an outside-in trader first. That's where the money is. There are back tests on this, okay? When you get to this level, and I notice I do ATR, I don't do standard deviation, because every stock has a different volatility matrix. And that way that eliminates that differential, drives it to the center line. High probability of success. You take the trade, and like I said, you wait for a secondary signal to confirm, and you go. And if it gets too crazy, that's when you get out. Remember, in this market, you can't stay in a trade forever. Here's Soxel. Okay, look how crazy this market's been. All right, now this has been Soxel consistently, these bumps. And we just been doing really, really well with it. Every move is being sold off. I don't trade on the 2-hour because it's a triple, but you trade it on the 5-minute. And so you can see, like this morning, we got a sell signal from the algo. We got a confirmation signal from the secondary algo, and that's a good trade here. Especially if you're trading a couple hundred shares, you'd have made $400 or $500 right there for the day. And it's just rinse and repeat, rinse and repeat. So that's kind of how we do it. And like I said too, and also, hey, if you have cryptos, don't ever give anybody your cryptos. I don't know how people fall for these scams. Do not ever give anybody your crypto, even if they sound like they're helping you, even if they sound like somebody you know. Do not do it. Okay.
I wouldn't give it to my mom.
What's
That's
that?
Don't even give it to your mom. You really need to collect and keep that tight. Like your mom asked, you're not.
Exactly. Don't do it.
Don't.
But anyway, I just popped this off here. That's what we do. And then Dave, like I said, you could do. You can put your website up there, and then for me, if you go to tradelikeagenius.com, call us is better, and then we'll get you set up. What I'm doing is we're actually winding down how many new clients we're taking. So if you're interested in joining us, I'm limiting it. And like I said, it's getting wild out there, so we're getting a lot more active. But volatility equals profit. So either tradelikeagenius.com or
tradewith2030.com. Click that link.
Yeah. And that way you get I give Dave credit for that and support his channel that way. But that's what's going on. And like I said, it's pretty cool. The algos are working great. The more volatility there is, the greater the profit. And the algos are just that much more profitable and have higher win rates because the market always overreacts, Dave. Always overreacts.
What's the
So,
news? Yeah. What about Clarity Act? That I'm wondering how much it's going to be pushing in. Clarity Act comes. I mean, it's going to be a positive tailwind for the crypto market, but how long is that going to last after the news? Sell the news because it's
well,
going
we
to take a
don't,
minute for
they
that to
just
have
keep,
anything
they just
move.
keep dripping us on that. Same with the Save Act. Everything is just like keeping everybody kind of in suspended animation here. So eventually they get to it. I guess when the banks have watered it down enough, we'll get the Clarity Act.
Yeah, they keep trying to throw in some sort of stipulation about ethics, and I laugh and I go, "You guys are the dirtiest bunch out there of insider traders." Of how long have you been doing that? So you get like 100,000. Well, I don't know what the salaries are for some of the congressmen, like maybe 150, and you come out like $20 million after a couple of years, and you're back like, what? You guys are so hilarious.
The ethics clauses are in there so that they can sue and arrest you, and then they'll choose not to prosecute them. That's all. That's the only reason why it's in there. The laws they're not equally enforced. So
It is what it is. Yeah, in the news, I mean, people are animal. I'm wondering with the solar activity too. Like how much do you think that plays in? Since humans, the way they react to different energetic inputs, or generally stock markets peak around a solar maximum, just generally, and just an overall market structure, they sort of hit that bottom around solar minimum, and there is really something to that on the solar trades. I don't know, but the news drives, but how much does it drive? And people
yeah,
are today.
and 2027 is a cycle bottom for the stock market too, and we're going to go into a super El Nino. So, we're all creatures of water in the sense that the tides and the pressure systems definitely affect people. So, the moon, not so much. They did back studies on the moon. The moon doesn't really help you at all in terms of buying sells. The system gets out of sync after a few months. But we're definitely going into, there is a large cycle that peaks us in 2026 and then actually pushes us down into 2030. So just so you know, and which is ironic because 2030 is your label for. So I think the next 3 years can be pretty rough for the stock market. Doesn't mean you can't profit from it, but it's a cycle that's been there, and I think it's going to raise its ugly head at any point here, and it'll cycle bottom in 3 years. But there's some, usually in the environment, there's one or two pretty big bounces, but we're gonna cycle down pretty hard. Okay, so they may be able to protect people with liquidity, but the valuations, look at the Kospi, right? That thing ran up 400%, and now it's crashing, and that's what's going to happen, Dave. This market is 2.5 times what it should be worth in all historical metrics, and at some point you just can't keep the plate spinning, and the valuations have to come back down to earth. The other thing too that people aren't talking about is the demographic damage that does. Remember, we're all debt-based societies, and as far as a bank concerned, you're not a human being. You're a debt asset. Okay, so no reason why they like immigration is that they can throw more debt on the population. But you have China and Japan and Korea and Europe that are absolutely collapsing in terms of population. We're kind of neutral to slightly down. Canada lost population. Canada lost population last year. Even with, they had net migration in, and now they have net migration out. It's something wild here. I know it's a little off topic, but it's interesting to me, is that they pumped in a lot of these unskilled immigrants into the country, probably for voting purposes, but they lost even more people that have higher education degrees, more than college. You're talking about masters and PhDs. They left the country in greater numbers than the people they let in net migration. And so that country is going to be in deep weeds. So you have migration issues too. China is the most rapidly aging country on earth. People don't realize that. And And so they're in a world of hurt. Don't ever believe anything you hear about China. I don't have to tell you anything. You're knee deep into it with your Taiwanese relationships, but Japan and Korea are the same way. There's now saying in 50 years will even be a Korea left, and not just South Korea, North Korea. Nobody's having babies because why would you, right? You're dirt poor and you can't even survive on your own, and you're gonna pump another baby out. So they're collapsing over there too. So that's another thing that's going to affect economic activity too, because you have less people. And there's an analogy for this. It goes back to a lot of things you talked about in the past. During the Black Plague, 25% of the population of Europe perished. But you know what happened? Wages for unskilled labor went up like 25%. Do you know why? Because there was 25% less unskilled labor. And so you're going to see wages actually rising in real term in this environment because there's not enough skilled labor. Even with all the automation, you can't, there is stickiness. You can't automate everything. I mean, I love Elon Musk, but you can't automate everything. There's too much friction in the system. Not everybody can be a one-person corporation, right? And have everything run by agents. It just doesn't work that way. And so you're going to have, you're going to see real wages rise. Okay. And when real wages rise against corporations, that's also going to put pressure on earnings too. So next 3 years is going to be really, really, really interesting. So if I would advise you, and I took my own advice, we have no debt in our family. We even paid our house off. Okay. We're being very careful, selective of the trades. Cash is king. Ability to generate cash from your trades is king. You and I were talking offline before. That's my approach. Your approach is you're gonna try to get lending from the assets that you own, and that's what you have to do. And so you got to be really careful here with this semi bubble bursting. It takes all the indexes down with it. Okay, because there's so many of these stocks embedded in so many ETFs that you can own something else that has nothing to do with the semi industry, and the price is going to go down because the ETF goes down and they have to shed assets in proportion to the way the shares are laid out. So you can lose even if you had nothing to do ever with semis because of the way the passive investing and the market cap weightings rules work for ETFs. So my caution is be careful. And then, if Trump makes a mistake here somewhere along the way, it could be bad news. And if Japan decides to intervene in their currency markets, guaranteed market sell-off. So there are a lot of potholes running in front of us. And then you got the news changing every day, right? Wars on, wars off, deals on, deals off, straits closed, straits open. So a lot of cross currents. And so just take your best shots. That's why I like to trade outside in. A lot of the bad news got absorbed. And even if you're just getting bounces back to the center line, you can make a really good living, even if you're not in a bull market.
If you're describing what you just described with everybody getting wrecked because of what their ETFs are including inside as a basket of helds, for a better term, everybody's looking at Elon like, oh, his SpaceX gets tossed into the top 100, so all the retirement funds need to buy that one because it's now inclusive, and they just like auto buy the top 100 that sits in a basket. Like, where's that capital going to rotate to? So you just described to me like a full-on contagion somewhere. The money's going to run somewhere to park itself in safety. Where is that going to be, that capital rotate out?
You got to remember, cash comes in two components, okay? You have cash, like you can see it in your checking account, right? Or currency. And then you have money supply generated from loans. So you see it in the stock market in terms of what's called margin loans, okay? So some of that money just disappears. It reduces the amount of available money supply. The rest of it seems to be rotating into healthcare, okay, and a little bit into banking. And I think there's going to be certain tech that's going to do well. Basically, the picks and shovels supporting these data centers. Like I already started moving my money into ball bearings, and for robots. I think robots are going to be a bigger play than data centers. Okay, and so so I've started doing that. There's space is going to be huge. Thing on SpaceX is like I'm going to put that into my daughter's her IRA for her, but I'm waiting. You have to wait for the lockup to people jump in these things at the IPO. You tend to lose money for the first 6 months. Okay, there's a study out on it. I advised everybody who would listen to me is that I wouldn't wait on SpaceX unless you're just a trader. So when 6 months from now, when the investors that were in from the beginning, they get to sell their shares, then I'm going to move in for a longer term play. He has the right idea. I think Tesla and SpaceX are combined to form a mega corporation, but there's some space companies out there and drone companies out there that I like that I'm owning for the longer term. And so those are the areas that we could see it. But definitely you see the rotation into healthcare already. AI, I think the biggest beneficiary of AI after programming is going to be in healthcare, without a doubt. And they're already being able to visualize molecules, visualize targeted treatments. They're able to sift the data and twist the cube around and see things that they never knew existed before. And so I think healthcare is going to be huge. There's a company out there, Schrodinger, which I own, SDGR, which is knee deep in that stuff. So, and then finally, quantum is going to be big. No names yet. I have some no names that I want to jump on, but quantum's going to be is going to be the next area, the next battle, if you will, for supremacy will be in the quantum space. So that's kind of where I would look to move. And then as we go into recession then and interest rates fall because of that, then, the bond market, TLTW will be the place to be. AI is not going away. It's just going to be different, I think, than most people think it's going to be, and the robots aren't going to be necessarily George Jetson, but they're definitely going to be very practical out there. And I think that's the American Renaissance too with the robots. You're going to start seeing, companies moving onshore. Smaller companies are going to be able to then link into the supply chains. And there's another company out there that I own that I trade sold calls on called Symbotic, SYM. They're automating the factory floor. They're automating warehouses. And that's a real company making real money, giving real returns. So anyway, that's what I'm doing. And why don't you trade with us and join us? I have very, very successful traders that trade with me, and they appreciate the camaraderie. We all kind of see the world fairly similarly, and so it makes a nice basis for group discussions. And we had discussions just like you and I are talking. So we have a voice room that we just get together and we can bang out different ideas, talk about different things. We have people with some really, really good backgrounds in all industries that bring up ideas that we wouldn't even consider before, and be able to position ourselves correctly. And so come join us, tradelikeagenius.com. Let me know you came from Adapt 2030 or
TradeWith2030.com. And it's really interesting because, Bob, you're the first person I've ever heard mention ball bearings for the new robots that are going to be moving around. You come back into the very basic industries again. If you would have said ball bearings or iron rail back in the day, you were right on the same thing. It's just the very base construct of having some machinery to operate that operates the new world.
There's two things. You can't have a robot with high-speed capacitors and also ball bearing. And I'm not talking about the ball bearings you get from China. I'm talking about the high specialized ball bearings. Yeah, a company called Scheffler, and there's a specialized capacitors. You need to have these capacitors that are able to then, the capacitors are able to release energy fast. Basically a robotic version of ATP, and you can't have robots without these. And so there's only very few people that make these, and very few that are public companies. And what's really interesting, Japan dominates a lot of this area too. So the Chinese got to be careful if they keep dicking around with Japan. Japan gets turn off their tech industry in a few short months, with the photoresist liquids and with some of these high-end capacitors and these high-end, ball bearings, because they people aren't going to, you can't export junk. These robots, they'll fall apart if you just stick in normal ball bearings or normal capacitors. You're not going to get the product in what you're looking for. So go for these guys, tuck them away. They'll be irrelevant to the economy because you're not going to stop AI and you're not going to stop robots. In fact, the worse the economy gets, the more robots they're going to put in. So you could be counterintuitive with these trades. So anyway.
Welcome to the tokenized George Jetson future that we're all looking forward to, especially your tokenized deposits. Look out, bank holders there. Do appreciate you staying around for our conversation. Please put comments below. I try to read those and get some ideas for next time Bob and I talk. And tradewith2030.com is linked in the description box below. Click it, go check out what Bob got over there. And Bob, any closing words for us here?
No, it's going to be really interesting summer. So just what they all like to say, be like water, flow with it, don't argue with it.
Was that a Chinese fortune cookie? Anyway, we'll see you next month. Bye for now.
Bye-bye.